Good afternoon and welcome to Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's the 23rd of February, and our guest today is Phan Vee Leung. He's the founder and CIO of Track Record Asia. Now, V, great to have you on the show, as always.
Thanks for having me, Brian. Let's talk about markets.
Yeah, let's talk about markets. But before we talk about markets, V, let's take a look and see how markets in the region have been performing in the first half of the day. Now, we start with crypto markets. Bitcoin's at 24,455. It's up 1.25%. Ethereum is at 1,667. It's up 1.43%. Now, looking across the regional stock markets, first of all, Japan is closed today for Emperor's birthday. So we start with the SGX. SGX is down 0.83%. Bursa Malaysia, the KLCI, is down 0.22%. Shanghai is up 0.07%. The ASX All Ordinaries is down 0.27%. The Nikkei is down 1.34%. The Nikkei is closed today. So that was yesterday's number. The Hang Seng is up 0.52%. And rounding up the numbers, we've got the Kospi, which is up 1.1%. Now, V, pretty much a mixed bag across the region. Tell us why.
I think everybody is just waiting for the U.S. inflation data tomorrow. So there's really not many market drivers right now. Market's trading a little bit weak for the last few days since the strong data from the US last week, strong some inflation data as well as the strong jobs numbers right from earlier this month. So since then, markets on the back foot, thinking that the Fed will continue with the aggressive rate hikes, keeping interest rates higher for longer. So that's been the recent few days. But now I think markets are getting its footing back, range trading for a while till more news on the inflation front.
Okay, so here's the point that I want to highlight that is becoming very, very clear. There seems to be a policy that there was a global central bank synchronicity in terms of raising interest rates. Now there is a divergence. We see markets like New Zealand, Australia, the US, higher for longer. That's the mantra. But then we've got pausing in places like pausing of rate hikes in places like South Korea today, and of course Malaysia a couple of days ago. What's your view on this, and how should investors react to these differing central bank moves and policy moves?
So I think you're absolutely right. There's a divergence in central bank approach now. The path going forward, right? They were quite clear before that they all needed to hike. It was pretty much obvious to a lot of people, given the inflation was very high and the economy was on the mend in a very strong way, right? Strong manner. But since then, what we have seen is that some central banks are now saying that they have reached restricted policy. Restricted policy level also means interest rates are high enough to curtail economic activity, and they want to allow for the lagged effects, right? It's not like you raise interest rates today and then you see the effect tomorrow, right? It takes some time before people get their monthly bills, get their mortgage bills, and get the slowdown in the economy across the slowdown in spending across the economy. And so, in fact, the first of the major central banks to do that was the Bank of Canada, and they went on what they call the conditional pause. The condition was that the economy as well as inflation continue to become to fulfill their projections, right? So what we have seen in 2 days ago, yesterday or the day before, the Canadian inflation rate was much just below projections. So I think that's a confirmation that the Bank of Canada is on the right track, whereas the Fed, the Australia, New Zealand, they are seeing strong inflation numbers still, and it's giving them doubt, right? They also, they're very adamant about talking tough. They know that if they start to talk about pause, markets will react. Everybody will start buying risk
Mhm.
assets. Stocks will rally, and that will ease monetary conditions. And that's the last thing they want to do. They want to have restrictive policy, and they want to see the economy slow down such that inflation continues to go lower towards the target. So how do we approach this? I think it's 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 an old adage, right? You don't fight the central banks, right? You don't fight the Fed, especially. Some central banks
Yeah.
should be fought. Yeah, they are not that great at conducting their policy. But I think we are at a part of the cycle where uh, the Fed, even though they talk very aggressively, they are highly data dependent. So it means if data shows that we will have the disinflationary process which they talked about in the meeting earlier this month, it continues to spread to more sectors, to the services sector especially, then we will see markets repricing expectations as well. So it's not a great time to be picking your long-term views, right? Because long-term views, it's not clear what the future holds, right? It
Mhm.
is very, very data dependent. And because of that, I think if you trade according to a much shorter horizon where the data is clear. For example, in Canada, it's clear inflation is slowing down. And we have many central banks talking about base effects, right? For example, the Bank of England say they have double digits inflation, and they say it's going to go 4% by the middle of this year. And it's based on high base effects and other factors as well. And if that should happen in England, I think inflation will definitely be slowing down in many, many places in the world, right? But of course, the most important would be uh, the U.S. economy, and we do have still inflationary sectors such as services and all, but we do have on the horizon the high base effects. Most of the price spikes happened from this time last year. So we are comparing against a very high base, and we should see a slowdown in inflation. And inflation, it's not something that it's going to slow down slowly when it drops, right? It will be if prices, of course, prices are high. I think all of us feel it everywhere. Prices are high, but it's
Mhm.
not increasing at the pace that it was last year, right? So if high
Yes.
prices, we are suffering high prices, but inflation could be much lower pace than before, right? So if that should be, we should see that in the data, and quickly the central banks will change, right? So I think
Okay.
the ones that are on pause now, they are being prudent. They think they've done enough. They want to see what happens with the lagged effects.
Now, final question and a quick one. V, your thoughts on the state of crypto markets today and what should we be watching out for?
Crypto markets is very interesting, right? Because we have seen stock markets recover maybe 10-15% in the developed markets from the start of this year. But we have seen cryptos, Bitcoin, for example, is up 60% on the year. There are some altcoins, alternative coins such as Solana, Phantom, is up more than 100% since the beginning of this year. And it's in spite of all the bad news that we are seeing in the sector, like continued failures of different crypto firms, uh, regulation crackdowns on Binance and other big companies. And that's where bull markets are formed, right? It's in the face of bad news and in the face of across the board bearishness by almost every expert investor, right? So I think it's something that is bears watching. I think the price action tells us that even on days when stock markets are really weak, cryptos are quite supported. I think that's
Oh,
some
V, where
underlying.
is this action coming from? So within, the crypto market is very connected, and you're part of that equation. Where is the money? Where are the money flows coming from in the crypto to
Okay,
fuel
so
this?
maybe there's a misconception here. You think I'm very connected, but not really. But let's just say I think the money is coming from uh, 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 people who continues to adopt crypto as an investment asset class. And also recently, we do have some good news. For example, Hong Kong has legalized cryptos, and that's huge, right? Because Hong Kong is I guess, is the testing ground for China for global markets, right? If it's
Yes.
accepted in Hong Kong, that means there's a lot of Chinese investment money coming through that
So this
sector.
is exactly what I wanted to hear, because this is what my research and speaking to different people in China and stuff have alluded to. Chinese markets, Chinese money has been flowing into the crypto markets.
Yeah. So I think there's various reasons for that. First, the regulatory acceptance of it is one thing, but it's also, I think, the crackdowns on Russia by all the allied nations is and the use of the SWIFT system against Russia. I think it opened a lot of eyes, right? From not so friendly countries, in that what if your country suddenly has a dispute with US and then suddenly all your assets are frozen, right? So I
Correct. So
think
you move it to
continues to,
cryptos, and you're more insulated against that.
yes, I think that drives inflows into asset classes or currencies that are not subject to confiscation, right? So I think that's what you want to hear. So that is my opinion as well. I think that's something that will continue. So it continues to develop, although in the bear markets, adoption continues to rise. Various factors, global macro factors, is driving money into cryptos as an asset class, or as a store of a value uh, in times of geopolitical disputes, right? Yeah.
Yep. Thanks, V. On that note, thank you very much for your insights, and thanks for coming on the show.
Thanks, Brian. Take care.
Now, we've been speaking to Phan Vee Leung, the founder and CIO of Track Record Asia, on BizTech's Asian Midday Market Watch, presented by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.